Welcome to Bears in Exile. Today is August 30th, and it is time for the market overview. We'll be looking at the Dow, SPX, VIX, XOY, TNA, UUP, FXC, GLD, and SLV. Alrighty. Not a bad day. We had consumer confidence way down. It wasn't a good day for news, in my opinion, but we did close up today, and it's right in between a hammer and a spinning top, both of which could indicate time for a pause, but maybe not. In the short-term moving averages, we can see that we are having a good crossover, and we actually have enough room whereas if we were to gap up tomorrow, we will have complete crossover prior to entering the bar. We are running out of room, but there is just enough to be able to do that. If it gets a side tick, it certainly will not look as strong, and certainly if it has a down tick, then it certainly won't get full crossover prior to going into the bar. But momentum has been strong last few days, and we do have the middle Bollinger Band below the short-term moving averages. Very nice. In addition to that, we have all of our secondaries on the daily ticking up. CCI actually getting above the overbought level, along with the fast stochastic, slow stochastic about to cross over it. And look at this, a 14-day RSI moving average, just barely getting to the oversold line, and the RSI itself almost to overbought. MACD and the histogram still ticking up, of course. And we've been saying for days now that the daily chart looks very strong, and certainly it has moved in accordance with that. All the faster time frames are not very pretty. If we look at the 180-minute time frame, we can see that we came down, we had a bar retest, it failed. We came back, got through the bar, and at some point, this is going to need to come back down, kiss the bar, and then bounce off of it for a proper, healthy breakout. But on the 180 time frame, you can see CCI ticking down along with both stochastics. The RSI moving average still going up, but the RSI getting a side tick, histogram getting a down tick, and the MACD itself still going up. In this time frame, you can see that we do have a divergence in the histogram, and which isn't too much to say in the 180. But if we go to the 60-minute, pull it up a little further, same thing. We got through the bar. We're going to need to kiss it and bounce off of it. You could sort of say that this was that, but it's not an attractive one. And on this one, we have both stochastics ticking down at the end of the day. 14-day RSI moving average getting to the overbought area, along with the CCI. RSI rolling over, along with the MACD histogram ticking down. And on the 60-minute, which is where we normally look for divergences, we have a very mild one on the CCI, perhaps getting stronger. We don't have one on the stochastic. We do have one mild one on the RSI, very mild. And actually it goes back all the way back here, but along with the MACD histogram, and it actually goes all the way back here as well, sloping down, and prices are going up. So it is interesting, and normally when you break through the bar, you do have divergences. That is natural, and that's what the loop over, kiss it, and bounce off of it resolves. So I'll be watching for that. So even though we have a very strong daily, we should have some sort of a small pause, pullback, and then continue on its way if this is going to be a real breakout, if the news doesn't drag it back down and do bad things to it. Same thing with the SPX, so I won't rehash that. SPX, however, is a hammer rather than a question mark hammer slash spinning top. You'll notice that we do have the good crossover in the short-term moving averages. We don't have as much room to get a complete crossover prior to entering the bar. But if we're going to get some sort of pause first, then that's okay. That does make complete sense. TCI high, fast stochastic high, slow stochastic almost getting to overbought, RSI almost getting to overbought, RSI 14-day moving average still in oversold territory, histogram and MACD ticking up. And going on to the VIX. Alright, now we have something interesting as well. We have a little doji star looking candle. We do have more crossover in the short-term moving averages, but we do not have a complete crossover, and it is not at a great angle for getting that tomorrow. So the chances of this putting the hurt on the bar are also somewhat diminished. We'll have to see if there's some huge gap down, then it will do it. But CCI ticking up, RSI 14-day moving average getting out of the zone. So this is a very bearish signal. If it continues on its way down, fast stochastic oversold, slow stochastic getting there. RSI itself clicking down along with the MACD and the histogram. Now, do we have divergences in the 60-minute time frame? We have a mild one in the CCI. We do not have one in the stochastic. We do have one in the RSI. It is mild. And we do have one in the MACD histogram. So will those play out tomorrow? Nobody knows. But they are there. And they can be busted. But it's nice to know that they are setting up. XOI, hammer, and not nearly as strong as the Dow or the SPX. It has not exceeded this peak over here, whereas of course the SPX has, and the Dow has. TNA. Alright, we have a spinning top in TNA. We do not have as much crossover in the short-term moving averages. We do have more room to get a complete crossover and separation prior to entering the bar. It will require a decent move up. CCI is very high, fast stochastic high, slow stochastic almost getting there. 14-day RSI moving average not yet out of oversold. RSI itself ticking up, along with the histogram and the MACD. And on this one, we do not have a divergence in the CCI or the stochastic, or, well, we have an ultra minor one in the RSI, and we do have one in the histogram. So not as strong divergence-wise as the SPX or the Dow. But notice the 60-minute. We did did a bar test, it failed, got through the bar. It should come back for a kiss and then bounce off of it. So I'm going to be watching for that. UUP, the dollar, spinning top. Notice the middle Bollinger Band line is crossing into the short-term moving averages, and which is and can be a point by which it changes direction. That is suggested also by the spinning top. CCI ticking up, slow stochastic hooking over, fast stochastic still pointing down, and the 14-day RSI moving average turning neutral, along with the RSI turning down. Uptick on the histogram, and MACD is just hanging out. So this one is questionable right now for a minor blip up of some sort, very possible. But overall, the short-term moving averages are still sloping down. If we did have momentary strength in the dollar, that would be negative for equities and would be our little pause to a slight move down. That completely makes sense. FXE, the euro. hammer, and short-term moving average is slanting up. Is this time for this to get a little blip down? Maybe. We do have a down tick. It was resolved intraday. CCI ticking down. Looks like the fast and slow stochastic are trying to loop over. 14-day RSI moving average getting a slight uptick along with the RSI itself. Down tick on the histogram. MACD still bullish. Mixed bag, but it certainly points to possible pause. Gold, our second VIX. Now this is really interesting because we had, the Dow was up today. The VIX was, it was up from yesterday's close. It wasn't a, green body candle, but essentially it was up. And now gold, our second VIX, is also up, and up a good amount. So this would indicate that, in my opinion, that the risk has not left, and strength in gold is it's debatable what it is, or whether it's good for the market or not. Normally, if it's going up, the dollar is going down, and the market is going up. But by the same token, it going up is also a measure of fear. So fear going up is not good for the market. All it does is increase volatility. But anyway, we will see. CCI ticking up, RSI 14-day moving average looping over, both stochastics ticking up, RSI neutral, and MACD trying to tick up along with the uptick in the MACD histogram. And SLV hammer, it is just like gold. It doesn't really have too much of a body. Oh, I'm sorry, I was thinking of the VIX. It's very similar to the VIX. And what else can we see? Alright, we still have the middle Bollinger Band lower, although it is crossing into the short-term moving averages, which are forming a flat line, and CCI ticking up, stochastics ticking up, RSI 14-day moving average neutral, RSI ticking down, histogram neutral, and MACD neutral. So, kind of a mixed bag, but I would say that it definitely favors the bulls at the moment. We still have this bullish bar that should lend it support along with the middle Bollinger Band. So, we have jobs data on Thursday, we have jobs data on Friday. I don't really expect it to be positive. So if we get a pause here tomorrow, which would seem to be likely to me, maybe it'll have a range all over the place like it has the past couple of days. But even so, if we have a side tick of some sort tomorrow, I'm not too enthusiastic with the prospect of jobs data for 2 days in a row, but certainly the market is trying to be bullish, and the promise of QE3 in less than a month now is certainly cause for optimism. And now that we are at the bar, it is time to see if we have a penetration of the bar, a real penetration by the short-term moving averages, or if we are going to have a failed bar test, in which case, if this fails, we should be going down to test the lows very shortly. So there you have it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.